Welcome to the Kimberlite webinar that take a comprehensive look at the pipeline integrity and inline inspection services market. My name is David Batt, President of Kimberlite Research, and I'm glad you can join us today. I'm accompanied by Andrew Thornton with Kimberlite Research, and together we'll take you through our 34th Kimberlite webinar hosted on behalf of the pipeline and oil and gas operators who have participated in our industry research. These webinars are provided as a professional courtesy and a thank you to the many oil and gas operators worldwide who participate in the Kimberlite industry studies. In past webinars, we've discussed the global drilling services, artificial lift, hydraulic fracturing, and perforating markets. And we've also taken a close look at the big four oil field service providers, SLB, Halliburton, Baker, and Weatherford. Let us know if you or your colleagues would like access to any of these prior webinars. Just send us an email or chat message and we'll connect you. Also, we often collaborate with pipeline operators and oil and gas operators worldwide, and we're glad to provide you customized presentations to your organizations as needed. Just let us know. Today, we'll be addressing the pipeline integrity and inline inspection services market, including updates on technology trends, as well as an overview of the competitive landscape of how the service suppliers, both large and small, stack up in terms of performance and service quality. Feel free to submit questions during the webinar, and we'll address those questions. You can email or chat or send them through the chat box. The findings that we'll be sharing with you today are based on interviews of over 200 pipeline integrity engineers and managers. And the trends that we'll be showing you today from 2015 to 2023 are based on interviews of over 1,000 pipeline integrity managers and engineers and over 35,000 performance ratings. So with that, I think we'll go ahead and dive in. Andrew, to kind of kick off things today, what can you tell us about the markets? In particular, any insights about 2024?
With drilling activity, it's a good indicator. So what we're seeing here is an expectation for next year for pretty healthy market, 5% growth on a global basis. The vast majority of that drilling activity is really going to be led by the offshore international land markets. Yeah. Middle East will play a significant role there as well. Those keen observers will notice there's a slight change in our expectations for North America, whereas previously we've been saying more like a 1% to 2% growth year over year. From our most recent studies and interviews with those users, we're looking at more like 1% to 2% down. Now it's North America, so it's very volatile, so we'll see how that plays out. But right now, we're anticipating a slight decline on a year over year basis, and that year over year part is important. And you can see here for the US how that's kind of trended over time. We see the depths of COVID in 2020, down 44%, then really 2 years close to 30 or above 30% growth. This year, 1%. Will it be flat? 1% when we all said and done by December 31st? We'll see, but let's just call that flat.
So 2 years of strong growth followed by 2 years of basically flat to very little growth.
Flat to little growth, but at a, obviously at a sustained level. So we've kind of reached an equilibrium point overall on drilling activity, but there's some interesting nuances there when it comes to production.
What's driving this though? I mean, why aren't we drilling more?
So let's have a look. Let's dig into rig count and then I'll come into what's driving this overall. So if we look at rig count, we get asked this a lot. Right now, we've pretty much hit bottom just the first last week of Q3, early of Q4 for the lower 48, about 592 rigs.
Okay.
We actually see a few rigs being added between now and the back half of the year. Not a huge volume, but we see some. And then it kind of picks up from there, 636, 655. But to year over year, this is going to be down 1% to 2%. Well, why? Why is the activity so reduced? This is a great chart here to kind of explain what's going on to your question earlier.
Okay.
So this is U.S. oil production in the red line versus, rig count in the blue. And, David, you spoke to it in the past. When you came out in the 1980s, there was 4,000 plus, drilling rigs going around. A lot of rigs. We get to kind of my time frame. Even so, 10 years ago, 15 years ago, we had 2,000 drilling rigs.
Right.
And look at the production in red. Well, we're at 600 and something today, and look at the production. So why is the activity from a drilling perspective or rig count perspective so low? It's because we continue to increase production. How? How is this actually, the shale revolution, the shale miracle happening? A lot of it comes down to continual innovation by our operators. Number of drilling days down, so drilling efficiencies improving, completion efficiencies coming down, they're improving. The average lateral length continues to increase, and that's just the average. We've got some people stepping out there up to 4-mile laterals, quite frankly, which is astonishing compared to what we saw a few years ago. Stage counts going up. So although the rig count is less, we see continual innovation, which is driving that productivity. This is the Permian Basin. You see a very similar trend overall as well. The other factor to consider here, because we're looking at production, is increased use of ESPs. We've seen a lot of that occurring with these longer laterals, these big ESPs going in. That's helping to improve the initial production. So a mixture of efficiency and productivity and technology continuing to drive this overall. One thing I should also mention is, and we saw it earlier in the rig count, we're starting to see some consolidation. And some of those lessons learned moving across and propagating across a different customer base. We often say when you see these mergers and acquisitions, like we've seen over the past few weeks, from a rig count perspective, 2 + 2 actually ends up being 3 because of the efficiencies of productivities, the continuous acreage they're able to get. It allows them to have less drilling rigs overall.
So we're producing more with fewer wells.
Yep.
The days of 1,000, 2,000, 4,000 drilling rigs are gone.
They're gone.
All right.
They're gone. Now, will it increase? Yes. Okay. It's going to have to increase to meet the expectations for oil demand. We've got a lot of volatility going on internationally, geopolitically, so we'll see what happens there. There's a lot of talk about spare capacity in OPEC+, but if that all gets snarled up in any degree of geopolitical event, that creates a call on U.S. oil, quite frankly.
Okay.
But turning to kind of pipelines as opposed to rigs, it's a slightly different market. So when we spoke to pipeline operators, simply put, are you going to increase, decrease, or keep your spending the same year over year? You can see the vast majority is saying, look, we're going to hold it flat or we're going to increase it slightly. Very few said they're going to decrease spending, which creates a sentiment index of above 70. For those of you who aren't aware, sentiment index can be simply put as above 50 equals economic expansion, below 50 would equal contraction. So if you're above 50, the market is growing. This is that index trended over time for pipeline. You can see it's very steady. 60, it quote unquote drops a little bit in 2020 to 58, but that's still growth and it continues to expand at a very steady rate. Compare that to, say, drilling, and here's what you get. This is your drilling. Like, you're not going to get the same peaks that you would get with drilling for pipeline integrity, but you don't get those lows either. You have to maintain those pipelines. You have to maintain everything that's flowing through that. So it's going to be a continual level of spend, much less volatile, and it's an incremental growth year over year.
So pipeline operators, they're committed to their integrity management programs, regardless of what's going on with rig count at oil pricing.
Exactly.
They have to maintain the integrity of those.
Exactly. So yeah, when we take a step back, it's an interesting market dynamic right now. We'll see what happens between now and the end of the year with oil prices, natural gas prices. But, flipping to pipelines specifically, David, what are some of these big challenges the pipeline operators are facing to maintain the integrity of their lines? And, maybe you could share some updates on technology and as it relates to some of this increased spending.
Sure. When we interview the pipeline operators around the world, we ask them several open-ended questions, and one of which is, hey, look, what are the biggest challenges you face in maintaining the integrity of your pipelines and your infrastructure? The pipeline operators are free to mention whatever they would like. So we capture all the verbatim comments, we read through them, and we build slides like this in the categories. But clearly what we see is, each survey update, 19, 21, and the recent 23 survey, corrosion's at the top of the list. Third-party damage follows. Aging infrastructure continues to grow as the infrastructure ages, and crack detection. From a pipeline inline inspection supplier, you can certainly assist with corrosion management technologies and crack detection technologies. Not much help from the service community with, third-party damage, of course. One of the types of corrosion that the pipeline operators find to be most problematic is pinhole corrosion. It certainly leads the list, followed by stress and external. When we ask the pipeline operators, what type of pipeline integrity issues are they facing that in their minds
Mm-hmm.
are not being able to be solved
Solved.
today. And the top three are unpickable lines, followed by crack detection, in the requirement for higher resolution, more accuracy of the data, being able to pinpoint the accuracy of the defect more
Mm-hmm.
precisely. When we ask the pipeline operators the role in which digitization will play in their future pipeline integrity programs, as well as the use of drones and robots, you can see that globally, about 40% of pipeline operators view digitization going to play a major impact in their future integrity management programs, and about another 29% for drones and robots. Most of the digital spending is around these machine learning and algorithms to try to learn more from the data that they're collecting and the measurements. But it also a fairly substantial amount of investment from the pipeline operators is still just trying to get their data that's in so many disparate forms into a common structure and format from which they can begin to provide some of these advanced analysis. For drones and robots, though, they're principally, being used drones for right-of-way and aerial surveillance and leak detection. Certainly, some of the robotic crawlers are good for enclosed areas such as tanks and such. We do track the age of the infrastructure, and when we talk to the pipeline operators globally, it's pretty interesting to point out that North America, about 30% of the pipelines and infrastructure is over 40 years old. And this poses a significant challenge to the industry. You pointed out half the pipeline operators are trying to keep their pipeline integrity budgets relatively flat if possible. Really challenging to do that when you have an aging infrastructure and you're adding to your infrastructure. And so that's going to really require the use of technology and advanced technologies to drive this cost lower.
So you're probably seeing a lot more problems with this aging infrastructure, and as a result, your budgets have to, depending on what your portfolio looks like, they've got to be balanced accordingly.
They do. And in the report, we track age of pipelines, and we also track, the diameters. Like you can see in North America, about half of the pipe is 12 inches or less. And we also track the throughput because we can begin to analyze the findings from this report in various subsegments, be it oil versus gas, large pipe versus, smaller diameter pipe. About half of the operators are planning to add to their infrastructure pipelines, but due to lack of support administratively in the U.S., most of the expansions tend to be, within state or intrastate.
Yeah.
A lot of expansion and repurposing too of facilities. Internationally, it's about 50-50. We do ask about the energy transition. A really small percentage of the pipeline operators are really planning or have plans to convert pipelines to hydrogen. We're going to continue to monitor this, but it's still in its nascent stages. And so,
and I would imagine that requires a significant investment, just to be able to transport hydrogen as opposed to natural gas, for example.
It does, and it will require some changes too in inspection programs. So the operators say as they convert to hydrogen pipelines, they'll probably conduct more crack detection and more monitoring and leak detection. So that's going to change their integrity program a little bit. Now, this is something that's interesting, and I think the biggest finding on this is actually here at the bottom right of the screen. Only about 58%, or say 60% of the digs that the pipeline operators go conduct in order to assess an anomaly that they found in an ILI report actually results in a repair. That means we've got nearly 40% of the digs that are false positives, so to speak. And so that's an opportunity for the industry to continue to advance its ability to more accurately identify and locate these defects.
Yeah.
Because that's an inefficiency that needs to be driven out of business. The other thing that we noticed too is only about 3% of these repairs require hot taps. TD Williamson continues to have the strength and brand ownership in hot tapping, and they are the number one preferred hot tapping supplier with an extremely high customer loyalty index as measured by the Net Promoter Score, with nearly 6 out of 10 of TDW's customers willing to recommend them for future hot tapping jobs. So that's a real kudos to TD Williamson there. Most of the technologies that are run are MFL. They run on the majority of the inline inspection runs globally. Ultrasonic crack detection is principally only used in about 15% of the runs. And you see the use of EMAT and phased array only makes up 3 to 5% of the runs, or 8% of the runs for EMAT. It does vary internationally versus North America. We also obviously varies by liquids versus gas, with ultrasonic crack detection being used principally in liquid lines, obviously. And then when we take a look at what's really preventing these lines from being inspected by the pipeline operators, unsuitable lack of traps, changes in diameter, flow conditions, and tight bends tend to be the largest challenges that they face. Mm-hmm. And we consistently find about 10 to 12% of the lines globally are not inspectable due to one or a variety of these conditions preventing inspection. And then maybe just to wrap it up would be, as the mega rule continues to kind of roll out and take effect, the pipeline operators in U.S. land are telling us that, look, it's probably going to alter our use of crack detection. We're probably going to use more crack detection. Mm-hmm. We're probably going to inspect more mileage. And we're going to continue to adjust our integrity programs as the mega roll continues to take effect. Now, Andrew, that kind of sums up some of the technology trends that we're seeing, but each of these pipeline inline inspection mm-hmm. suppliers have a distinct brand or market image. And before we dive into the actual customer reviews to see how they're actually performing in the eyes of the customers, what can you tell us about these suppliers' market images or brand images for which they're viewed as having particular, say, technology strengths, if you will?
Sure. No, absolutely. And that brand image and that market image is critical, even beyond customers who you service on a daily basis. How are you viewed? What is your perception? So let's start off with Baker Hughes here. And we can see, just so everyone who's not familiar with this, if you're going to the right of the vertical axis here, then your brand image propagates beyond your own customer base. Obviously, if it goes to the left, that would be a negative score on that front. Okay. So we can see Baker Hughes actually has a very strong brand image and inline inspection across a range of technologies. So, continuing to position themselves as that technology leader. If we take a look at Rosen, for example, you can see that they're extremely strong in EMAT for crack detection. That is a strong brand image for them. Probably a market leader position, quite frankly, in terms of overall brand image. Also, they've got a very strong correlation here for, circumferential MFL. Now, when we come to some of the other operators like TD Williamson, for example, you can see they do have some brand deficits to the left-hand side.
Right.
But again, they've also got a positive correlation of viewed very strongly for that circumferential MFL, circumferential MFL. Sure. That's a tongue twister if I've ever heard one. But then we get to say like NDT. Now, what you'll notice, we've gone through 3, 4 of these. Every single one of these, service companies kind of has their niche, their bit where they really got a strong technology, and it's up to the pipeline operators to kind of survey that and determine what are their needs, who do I want to use. So we look at NDT, right. Ultrasonic detection. Extremely strong view for ultrasonic detection, but they've also now started to get this acoustic resonance technology view. A lot of that's coming from their acquisition of Halfwave.
Right.
And then when we get to Enduro, low resolution caliper, as we can see over here, that's driving a lot of their brand image, but they've got some deficits. But again, everyone's got their sweet spots, so to speak. And then Integra, similar kind of story. It's a bit of a mixed bag, but strengths in ultra high resolution MFL and high resolution deformation. OnStream, similar story. We can see this going across here on the ultra high resolution MFL. And then to kind of sum it all up, as I spoke to, everyone's got strengths and weaknesses. What is it that you're looking to do as a pipeline operator? What's your need? And that's going to be based upon the challenges you're experiencing. You've got a range of different suppliers here, each with different strengths and weaknesses to assess effectively.
This really speaks to the need for the pipeline operators to really collaborate with their inline inspection suppliers to really understand their strengths and weaknesses and kind of take that into account. As a pipeline operator, you're dealing with the challenges that you're facing with your assets and with your pipelines and lines, for sure.
No, and I think that's a good segue, hey, David, is like, based upon the interviews we've conducted and the observations, what does the competitive landscape look like, and how do operators go about choosing what would be the best solution for them effectively.
Sure, absolutely. Over the years, like I said, we've amassed over 35,000 performance reviews on these pipeline inline inspection service suppliers. And what we find in the competitive landscape is that the pipeline operators globally have a lot of choices to choose from. There's over 20 different pipeline inspection service suppliers cited as being used globally. Most pipeline operators use two or more suppliers for their pipeline integrity program. Certainly, Baker Hughes and Rosen has the deepest market penetration. When you start to look at market share, what we find globally is that Rosen is clearly the market share leader, followed by Baker Hughes. When we start to look at it regionally, we start to see some really distinctive trends. We see TD Williamson's market share in North America land really decrease
significantly
by more than half. You've seen a lot of these other smaller suppliers really start to grow. OnStream's growing, Integra's growing, Enduro's staying stationary. NDT with their industry-leading ultrasonic crack detection growing. You see growth with Baker Hughes and with Rosen. When you move internationally, you see Rosen and Baker Hughes really kind of dominating the market. When we interview the pipeline operators, and again, I'd like to thank all the pipeline operators who contribute to these industry studies that allows us to kind of aggregate these findings and share with you these insights. But when we interview the pipeline operators and we ask them to rate the inline inspection service suppliers that they're using on a scale of 1 to 10 on a range of performance factors, responsiveness to needs, technical support, availability, competency of field service personnel, project management, accuracy and defect sizing and location, one of the most important reasons to bring in, report quality and so forth, first run success and pricing competitiveness. What we see here is a wide range of performance. So there's no evidence to suggest that all these inline service suppliers are performing at the same level. In fact, when we start to trend, and this is the U.S. land here, the industry average, which is the dash line, you can see that responsiveness to needs as an industry, went from being, rather good, then it declined and then improved, and it kind of rolled over a little bit in 23. You see certain suppliers down here like Rosen, where their customer review ratings were consistently below the industry average, but Rosen's performance and customer review ratings show a trend of improvement over the years. Whereas TD Williamson historically was a leader in customer responsiveness and technical support, their customer review ratings have been declining while the industry average has been improving. You see other suppliers like, OnStream, customer reviews, relatively strong, NDT. And so the whole point of looking at these various performance measures, and from a pipeline operator's perspective, it's very clear that not every supplier is performing at the same level.
No.
They each have strengths and weaknesses, as you pointed out, in technologies. They each have strengths and weaknesses in terms of execution. In terms of, say, accuracy and defect sizing, for example, you see companies like right here in blue, NDT with ultrasonic crack detection, and Integra with ultra-high resolution MFL getting extremely high customer reviews for accuracy and defect sizing.
Yeah.
Whereas if you take a look at TD Williamson, their customer reviews on this very important metric is consistently lagged the industry average. So when we translate this over into, say, a value map here, which is a graphical representation of the competitive landscape, where we cross-plot supplier performance on the horizontal x-axis and pricing competitiveness or pricing strategies on the vertical y-axis, you can see that in this top right-hand premium offering quadrant, NDT and Baker Hughes kind of stand out as those premium-based suppliers, cost more but worth it. TD Williamson is viewed more as a discount provider. They're no longer industry-leading performance, but they offer attractive pricing to where they fall well within the fair value fairway.
So it's a well-segmented market there.
You get what you pay for. And so, again, to the pipeline operating companies out there, depending upon what your needs are, in some cases, maybe you need to go with a premium supplier with industry-leading performance and technology. In other cases, maybe simplified MFL is all you really need, okay? Now, we see variances regionally. When you move into the United States land market, you start to find a whole lot of these suppliers that are growing, OnStream and Integra, for example, who are viewed through the eyes of the pipeline operators as delivering outstanding value, and they continue to grow market share. TD Williamson, that used to be in the value advantage quadrant, performance has declined, shifting from the bottom right quadrant over into the left quadrant, and that correlates with their declining market share by more than 50%. When you move into Canada, you see OnStream very well positioned. You see Rosen having changed pricing strategies to compete with OnStream. Baker Hughes is the preeminent premium supplier in Canada. When we move, say, internationally, you got the two big heavyweights, Baker Hughes and Rosen, really dominating the space with NDT, albeit not as large. They're competing rather admirably with them. TD Williamson's pricing internationally is on par with industry expectations, as evidenced by their spatial positioning on the y-axis right here. But the performance tends to lag. But as you can tell by the size of their dot, it's not really a major area of focus any longer for TD Williamson. We do start to see regional differences, like in Europe, NDT and Baker leading. And as I mentioned earlier to the pipeline operators, if you would like us to collaborate with you, we have the ability to filter out regionally to assist you in understanding the competitive landscape. Even if you take a look by technologies, amongst the pipeline operators who are heavy users of ultrasonic technologies for crack detection and liquid lines, you can see that NDT is well positioned as a premium-based supplier. Rosen's viewed as a value-based alternative. Conversely, when you look at EMAT, these are two strong areas of technology proudness for Rosen and for Baker Hughes, but Rosen is viewed as very much a value-add supplier as it relates to EMAT technology. So that kind of wraps up the competitive landscape. But I guess maybe the next step would be, Andrew, I know we have updates on pipeline chemicals and who the leading suppliers are in this segment. So maybe you could kind of take us through the pipeline chemical section real quick.
Yeah. And before I get to, who's leading in this section, let's start with what are the challenges that we're seeing. So, when we ask the operators, what are the problems you're seeing in terms of deposits, you can see that corrosion, paraffin and wax and asphaltenes, hydrocarbon and sludge, all sorts of deposits are creating a continual challenge. In our 23 survey, over 60% or 60 to 60% of the people said corrosion or paraffin were seeing these problems. So when you kind of look at it holistically in terms of what's the share of problems, you can see corrosion, it's 15 to 16%, and then paraffin, wax, asphaltenes. So another 11, so 25, a quarter of the people that we spoke to, this is the big issues they're having in terms of overall deposits. Now, the question becomes, okay, we're seeing these challenges. Do we have some solutions? So we asked them, simply put, how effective are the solutions out there in the marketplace for corrosion scale, cleaning agents, microbiocides? You can see for corrosion, that big issue we just discussed, just over a third, 35%, would say, look, on a scale of 1 to 10, I'm giving them a 9 or 10. So about a third of the people out there saying, we've got some very effective solutions. But, you've got a 10% here saying, look, the solutions aren't effective. And 56% in the middle saying, well, sometimes they are, sometimes they aren't. So I think there's a significant opportunity there when you look at the challenge that our operators are facing to maybe step up to the plate. And can we nudge this 35% closer to the 50% line as an example, similar to what we have with drag reducers?
Sure.
As it relates to, who's leading in this space, Baker Hughes and ChampionX make up nearly 2/3 of the market overall. Baker obviously leading ever so slightly, but it has seen a slight decline over the last few years, whereas ChampionX has been picking up a little bit. And then we've got, Big Red, Halliburton, and SLB, smaller markets for them overall, but it's something that they're, looking and moving into, and we've seen some increases year over year.
Right.
Alongside some of the smaller players such as PureChem and Clariant. So it's a mix. You've certainly got two big horses out there, but some of the others are starting to gain ground over time.
Sure.
So David, I know we're getting close to 12:30 exactly. To wrap things up, what do you see for the rest of 2024 for the oil and gas industry?
Okay.
And then from Kimberlite's perspective, what market updates have we got coming up in the next few months?
Sure. We kind of look out to 2024. The market overall remains relatively healthy for the oil and gas industry with elevated oil prices supported by accommodative policy. Certainly, the OPEC supply cuts are helping. Unfortunately, with all the geopolitical unrest, there's going to be a tremendous amount of volatility and uncertainty in the market for 2024. But due to the elevated oil prices, the oil and gas operators and the pipeline operators and the service suppliers should all be able to generate really healthy returns for shareholders. So that's good.
Yep.
From an integrity perspective, as we pointed out earlier, the industry is significantly challenged with an aging infrastructure. The need to drive new technology to drive the integrity budgets lower, but at the same time improving the accuracy. With only 6 out of 10 digs being accurate, there's a lot of inefficiencies.
It's a lot of capital investment. It's a bit like drilling a dry hole, so to speak.
Exactly. And we also pointed out today that so many of these inline inspection service suppliers have so many great strengths and technologies and capabilities, and there are regional variances in their strengths, that we really encourage the pipeline operators to take more time to collaborate with the service suppliers and to really understand their technological differences, their advantages and strengths, and the regions in which they can best support you to meet your needs. Because it's only through this joint collaboration that we can continue to advance our industry forward. The demand for oil and gas will continue to increase along with production. And so we're going to have to continue to invest.
Yeah.
In terms of reports coming up from Kimberlite later this year, we'll have updates, information evaluation, and cementing and wellheads and liner hangers. And then in the beginning in the new year in January, we'll have our big update on the big 4 oilfield service companies, SLB, Halliburton, Baker Hughes, and Weatherford, across their entire portfolio of offerings. I want to thank everyone for attending, and to the many pipeline operator companies that participate in our industry research. I want to thank you. As you can see, with your gift of feedback, we're able to put together these industry reports and benchmark and trend technology adoption, use, and other operational trends, as well as supplier performance. If any pipeline operators would like to have questions or want to collaborate more closely on a particular need that they have, please feel free to reach out. Thank you, everyone, for attending, and look forward to seeing you at our next Kimberlite webinar. Bye now.